Welcome to Switzer Investing Insights, brought to you by nabtrade. And the big story today is, will the stock market end with a bang or a whimper? With June 30 coming up, Paul, what do you think?
Look, I think we may get a bit of a bang, Peter, but that's simply because I think we're getting some pretty good leads out of the US. But before we do that, let's just have a look at what the market's done this year and also what it's done on a financial year basis, just to see how it actually is positioned.
Yep.
So on the screen in front of you, you can see the price and accumulation index for the month of May, the return, the calendar year to date, that's 2018, and also the financial year performance. So in the month of May, both the price and the accumulation index up about 1%. For the first 5 months of 2018, price index, market's down a fraction, but the accumulation index, it adds back dividends up 1%. Nothing too much to smile about. But financial year, for the first 11 months of 2000 and this financial year, the price index up 5.1% and the accumulation index up 9.4%. So financial year, returns aren't going to be too bad.
Isn't it funny, because when you first showed me the numbers, I actually said to you, well, how are we doing on the financial year? I was looking for something positive, and it was a reasonable year, wasn't it?
I was able to surprise myself. I'd forgotten what the last half of 2017 was actually like, so it's pretty easy to put these things to one side.
It is. Now let's go to the components.
Yeah, so this breaks down the different parts of the market. So we have the top 20 stocks, the so-called mid-cap 50, which represent stocks numbers 51 to 100 by market capitalisation, and the small ordinaries, which covers stocks ranked 101 to 300 by market capitalisation. Not a huge story either. The top 20 stocks have done a little better in recent times, up 1.2% in May, and up 0.5% year to date. So they're sort of doing okay. Yeah. I suppose that the only take on this is we've seen a bit more performance out of the smaller caps in the month of both May and year to date. And that's interesting, Peter, because we're seeing the same sort of story in the US. It's been the Russell 2000 index, which is a much better representation of small and middle America. That's actually been setting new highs. And the NASDAQ, of course, the technology index, we've seen that the top 30 stocks in the Dow Jones not do as well. So it's been the growth in the US is coming out of the more domestically focused smaller cap and medium cap companies. And I guess that's what we're starting to see a bit in Australia. Yeah,
which is a good sign, because it means that the economic growth we're seeing as headline numbers are starting to go right throughout the economy, and ultimately end up in profits as well. Okay, let's have a look at the sectors now, Paul.
Yeah, I think this is really a story of two halves here in terms of the sectors. So this is the 11 major industry sectors on the S&P ASX 200. Yeah. Healthcare, the clear standout, up 5.6% in May, 21.3% year to date. That's really a function of sort of the three big leaders in the terms of CSL, Cochlear and ResMed, really been just keep on going to new highs, Peter. The consumer discretionary sector, which is encouraging, up 5.1% of the month. Stocks like Aristocrat and Flight Centre, the market looking for stocks that are growing and being rewarded. So they're all positives. I think the other take, before I get to the negatives, is both the energy and material sectors are still outperforming the market on a year-to-date basis. I think that's a place still to stay at least index weight. None of us, me in particular, Peter, aren't very good predicting commodity prices, but the commodity prices are in an cyclical upswing. Yeah. And so I think you still stay long those sectors a little bit and just go for the ride. Of course, the big drag on the market is the financial sector, the biggest sector on the S&P ASX 200 with a weighting of 32.7%, down 0.2% in the month, down 5.9% year to date. And bear in mind, that hides stocks like Macquarie Bank, because Macquarie Group is part of that, and that's had a really good run. So the performance of some of the major banks and some of the insurers is even worse than that, down.
And there's a lot of Royal Commission effect in there.
There's a lot of Royal Commission effect there, and of course the telco sector, which is largely Telstra, but not exclusively, down 10.2%, down 18.5% year to date, and follows a pretty horrific 2017 and 2016.
Okay, so let's look at the key issues that could ultimately determine whether the June 30 end of the financial year ends up being a bang or a whimper, Paul. Let's go through some of the biggies.
Well, I think the first one, of course, is the US Federal Reserve meets on the 12th and 13th of June. We'll get a decision early AM on the 14th of June. Yeah. Market expectation is that they'll increase interest rates by another 0.25%. Yeah. What the market, I think, will be watching for is what their expectations, what they say about future interest rate increases, particularly the so-called dot plot, where the governor's sort of put out what they expect interest rates to do over the next 3 years, and the market will be looking for any movements in this dot plot versus the last dot plot.
Yeah. It's like the board's predictions of what they think they're going to have to do.
Yeah,
with
this
interest
is
rate
not a
rises.
decision. This is just putting on a piece of paper where they
Guesswork.
think rates might be at the end of 2018, the end of 2019, the end of 2020, and the market analyses all the dots and sees whether anyone has shifted on the board. So
Exciting stuff.
exciting stuff, and that's what the market will be worried about. So are we likely to have an additional increase this year, or perhaps 2 increases? So that's where the focus is going to be. Bond yields in the US, well, they sort of went a bit over 3%, dipped under 3%. I think they're going up on a pretty orderly basis, Peter. And
Sort of reflecting the growth of the US economy, and people aren't worried about bond yields rising if it's driven by the growth and the solidity of the economy.
and it's also, if it's happening in a fairly orderly basis,
Yeah.
it's far less concern if it just blips quickly. So that's another factor. And then, of course, we've got President Trump and trade and all
tremors.
those sort of things. But despite all that, NASDAQ hitting all-time highs, the Russell 2000 at all-time highs. The US market looks in pretty good shape. So that's got to be a positive for our market. Locally, there's a couple of factors to consider. The Royal Commission, the 4th round of that gets underway on the 25th of June.
And this is the last round, Paul?
No, I think there are eight rounds in total, but
yeah.
I just think this is starting to wane a little bit, Peter. Maybe I'm being a bit premature, but this round's only going to look at sort of, it's going to be based in Brisbane. They'll be having hearings on loans to farmers, also treatment of insurance companies in terms of natural disaster areas, so things about whether people in North Queensland get flood insurance and those type of things, and also the work with banks and treatment of the Indigenous community. So I'm not sure that's going to have a huge ramification for the market. So that's not till the 25th of June. And then we've got, of course, the end of financial year, bit of tax loss selling traditionally in the last couple of weeks of June can sometimes have an impact. But look, that hasn't been such a big factor over the last couple of years. So my inclination is June's perhaps looking a little bit better for our market. What do you think, Peter?
Yeah, I'm with you, Paul. I don't think we'll have a big finish to June because of things like tax selling, but I think we're kind of getting the kind of momentum that will mean a good start to the next financial year. And I think there's going to be a lot of contrarian players who will look at the banks, the PEs are getting really low, and also look at Telstra's share price and say, these guys have to improve their performance. And so I think there's going to be a lot of people, punting on those 5 stocks, the big 4 banks and Telstra. So that's Switzer Investing Insights brought to you by nabtrade. Thanks for joining us.